Apple just dodged a $20 billion bullet. If the DOJ got its way, Google's default search payments to Apple would have vanished overnight. That's $20 billion of Apple service revenue gone. But no, instead, Apple gets to keep the cash for now. The stock trades at about $238 a share, and analysts see it going as high as $260. But the real question is this: can Apple keep growing while regulators circle and AI threatens to rewrite search itself? Well, I'm still bullish. Here's why. It's the services revenue, Apple's highest margin business. It jumped 12% last quarter to $27.4 billion, and that's Wall Street's favorite segment. But here's the part that nobody's really talking about. This ruling actually gives Apple insane leverage. They can now play Google against Microsoft Bing, or even new AI search players. And with over 2.35 billion active devices, Apple can now charge a premium just for access to its users. And that's the signal I'm watching, and it could mean fresh billions of dollars of fresh revenue streams if Apple executes. In this video, I'm going to break down Apple's numbers, the real risks the market isn't pricing in, and why I think Apple offers that rare balance between growth and stability. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor, and that's a good thing because it means I'm not going to sell you hype. I break down the numbers so retail investors can make smarter, more confident decisions. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Now, Apple needs no real introduction, right? It's one of the most valuable companies in the world with a market cap of around $3.5 trillion. That's more than the GDP of most small countries. And here's the thing. When a company gets this big, the question isn't just, can it grow? It's how much bigger can it realistically get? The company generates revenue through its products and services segments. The iPhone alone generated over $44.5 billion, or 47% of Apple's total revenue for the quarter. Meanwhile, the services segment contributed around $27.4 billion, or around 29% of its revenue, making it the second largest revenue driver for Apple, and it's consistently growing year over year. So you could say Apple is slowly shifting from being a hardware-first business to a recurring cash flow machine. That said, the market is full of skepticism surrounding Apple, despite its solid business foundation. And one of the drivers of this bearish sentiment is related to antitrust issues. And this is where the story starts to get messy. Big tech versus the government, and Apple right now is right in the middle. But what exactly happened here, right? Well, back in 2020, the Department of Justice, they started by filing an antitrust lawsuit against Google, arguing that the company has illegally monopolized online search through exclusive agreements with device makers like Apple. The DOJ's original proposals were absolutely brutal. They wanted Google to divest Chrome and potentially even force the sale of Android, which is Google's operating system. After a 10-week bench trial, Judge Amit Mehta ruled in August of 2024 that Google had indeed held an illegal monopoly in the general search services and advertising markets. The government also sought to completely prohibit Google from making any default search payments to device companies, which would have immediately vaporized $20 billion of Apple's annual revenue. Imagine that. $20 billion in pure profit gone overnight. And that's the kind of thing that keeps Apple investors up at night. However, the final ruling last week was far more lenient than what the DOJ originally wanted for Google. That same federal judge ruled that Google can keep Chrome and won't be forced to divest Android, which surprised many people who expected the hammer to come down much harder. But it wasn't an entire win. Google still faces restrictions on exclusive contracts, that condition payments or licensing, though they can still make payments to preload products. Judge Mehta also stated that generative AI has changed the course of this case. AI chatbots are becoming an alternative source of information to traditional search, which weakens the monopoly argument. So even the judge is acknowledging that AI isn't just hype, it's already rewriting the rules of big tech power. However, where it comes back to Apple and why this ruling matters for you as an investor, well, for starters, Google pays Apple approximately $20 billion a year to be the default search engine on Safari. That's roughly 20% of Apple's entire service revenue for the quarter. Services, by the way, is Apple's highest margin business and the segment Wall Street loves the most because of its recurring profitability. This means the ruling is good news for Apple, as Google's payment to Apple can continue, however, with certain conditions. But Apple can now renegotiate default payment rates annually to better monetize search across its partners. In plain English, Apple just gained negotiating leverage, and leverage means money, and this gives Apple more leverage than ever. For example, they could make Google now compete against Microsoft Bing or any other newer AI search companies like Perplexity. Apple also has the option, but not the requirement, to introduce a screen where users can select their preferred search engines, and it could collect new fees from search partners if it chooses to do so. Personally, I think this is a huge advantage for Apple. According to recent data, Apple has over 2.35 billion active devices worldwide. These customers spend more on apps, services, and even digital content than any other smartphone user base. And guess what? Search companies want access to these users, and Apple can charge them a premium for it. That's what I call a hidden growth lever, and most people are missing it. But Apple, they can pull it anytime. And let's be real. Every bullish setup, of course, has cracks, right? Here's what I think could go wrong. The risks to Apple's business model, because as investors, we need to understand both sides of the story. Actually, something that recently came up in my Discord server was the fact that the biggest risk is if Google appeals successfully and a higher court imposes stricter remedies. Although I doubt that the judge will require Chrome to be divested, appeals courts can be unpredictable. So if a future ruling completely disallows these default search payments, Apple then would lose $20 billion in essentially pure profit overnight. There's also a risk from AI. During the trial, Apple's executive, Eddie Q, testified that Apple had seen a decline in Safari searches for the first time in a while as users shifted to AI-based search options. If users begin to bypass Google search through Safari and instead go directly to chatbots like ChatGPT, the value of the default search position could diminish significantly. Another risk is the regulatory setting. If the DOJ succeeds in restructuring how huge tech companies operate, Apple could be the next target. Well, they're already facing their own antitrust lawsuit over the App Store's 15 to 30% commission and their tight control over the iOS ecosystem. And guess what? The DOJ considers its antitrust lawsuit against Google a success and could push it to go after Apple's own monopolistic practices. Google has already stated its intention to appeal, which means that this case could drag on until 2026 or even 2027, potentially even reaching the Supreme Court. That's years of uncertainty hanging over Apple's most profitable revenue stream. And markets hate uncertainty, which means volatility is the name of the game. So let's zoom out a little and look at Apple's fundamentals, because numbers, they don't lie. The financial impact of the recent ruling is yet to be seen. But looking at Apple's most recent quarter, revenue rose 9.6% to $94 billion, while net income also rose about 9% to $23.4 billion. These numbers on a percentage basis aren't explosive for sure, but for a company of Apple's size, a consistent mid-range single-digit growth is still quite impressive. And speaking of which, iPhone sales increased 13% to 44.5 billion, and Mac computer sales rose nearly 15% to 8 billion. However, iPad sales declined 8%, while the accessories division also declined 8.5%. So, service growth is catching up with iPhones, and this is the diversification that investors want to see. With this, Apple is becoming less dependent on the iPhone upgrade cycle and more reliant on the ecosystem of products and services. The company also generated a whopping $81.7 billion of operating cash flow in the quarter alone. That's why I say Apple's balance sheet is a fortress. Even with headwinds, they're still printing cash, and all this gives Apple options. They could lose Google's revenue tomorrow and still be one of the most profitable companies on earth. Now, here's where the rubber meets the road, so to speak, how the stock is actually trading. Bank of America raised its target on Apple stock from $250 to $260 per share, which means I think they see the recent ruling as a win for Apple. At the moment, the stock trades around $237.88 a share, which suggests as much as 9% upside to analysts' target. However, what I find more interesting is the resilience of the stock. I mean, despite all the uncertainty around Google's payments, Apple's share price has held up really well. It's volatile for sure, but there weren't any massive sell-offs without a recovery. To me, it looks like the market is pricing in either a continuation of the status quo or Apple's ability to find alternatives to Google. The stock has gained about 7% in the span of a year and about 110% on a 5-year scale. That kind of long-term compounding is what makes Apple a core portfolio stock, even if short-term drama shows up. So with all this regulatory clarity, I think the stock will continue its upward trajectory. So here's my bottom line. Personally, I believe owning Apple strikes a balance between growth and stability, which is very rare in the sector. The Google ruling favors Apple. The services segment is consistently growing, financials are solid, and the company is now more flexible with partnerships. The stock offers a reasonable value at current levels, but sure, there's risks, and the company has consistently mitigated these uncertainties over the last 2 decades. And that's why I'm so bullish here. Apple isn't perfect, but it's proven it knows what to do and how to win under pressure. So that's my take on Apple. Are you buying, holding, or selling? Let me know in the comments below. And of course, if you found this video helpful while you're there, do like and subscribe so others can find it as well. That's it for me today. Thank you so much for watching, and I'll see you next time.